stocks now to the stock of the moment. Orchid under pressure this morning. Raghavendra Rao joins in to talk about that deal. Raghavendra, hi, morning. We've been hearing in from your con call as well. So just walk us through what this means, Raghavendra, by way of what gets diluted or hived off from your revenues and what you think will get added back in this 10-year long deal with Hospira.
Yeah, thank you and good morning. This is a deal which will help Orchid in many ways. First of all, we are continuing our relationship with Hospira and we are strengthening it even further by getting into a long-term agreement with them to enable them to sell our injectable products in many more markets. So they will be doing the injectable parts of the dosage form business and we will be supporting them from the back end by a supply agreement for a period of 10 years. And in consideration for this, they are giving us $400 million, which will help deleverage the balance sheet significantly and provide enough cash for us to look at the new growth opportunities as we go forward.
Raghavendra, interestingly, your stock has reacted on the way down today. I can only imagine that the market's apprehension is that to restore your balance sheet, you've sold off the most exciting part of your business and kept largely the API side. Is that a fair criticism of this deal that you've done, that to protect your balance sheet, you've probably sacrificed the most rewarding and the most high potential part of your business, the injectables?
I think we have to see it in perspective, because if you look at the three parts of the business that we have given to them, one is the cephalosporin injectable business, which is in the mature phase. There are no exciting new cephalosporin antibiotics dosage forms that are going off patent in the next few years. So the cephalosporins like ceftriaxone, cefazolin, cefepime and other products that we have launched in the last 3-4 years have come to a mature phase. So there's no great additional revenue or profits that can come from that. The second bucket is tazobactam and piperacillin, and by the time the deal is consummated, we would have encashed the complete exclusivity period that is given to us by the FDA. By March 15th, the exclusivity period ends, and by March 31st, this agreement is going to be converted into actual transaction. So post the exclusivity period, the other competitors will come in. So kind of a normal run rate of tazobactam is what is going to happen, and not an exclusive position in that. Then the third one is the two carbapenems, imipenem and meropenem, where the dosage forms are the ones which are going to be sold by them. There are no new penems that are going to come in the next 5 years. For example, there are after 5 years only other penems patent expiry is happening. So in that sense, in that context, if you see, this is 7 injectables that are being given to them in terms of a dosage form sale and supported by the back end bulk supply, and all the rest of the business, including the Parafor, FTFs and the non-antibiotics and the cephalosporin orals, are all antibiotic oral business, including dosage forms for the regulated markets, is with Orchid. So I think looking at it in that context, I don't think the criticism of most exciting is what is being hived off. And also look at the valuation we are getting for that, which is not only just for debt leveraging, but we are looking at current year operations on a run rate basis of about $90 million of top line and about $35 million of EBITDA. So it is more than 4 times sales and about 12 to 13 times EBITDA. So I think it's a decent valuation.
Since you have indicated, though, Raghavendra, that the main plan over here is to retire debt, what is the current debt on books? Will all $400 million go towards repairing that? And how does this change your interest outgo going forward?
Obviously, interest saving of very close to 200 crores will be there because of the amount that we will be receiving in a couple of months. And we have a long-term debt of 1,200 crores. The entire long-term debt will be repaid. And other than that, we have a working capital of about 550 crores. That will become about half because we don't need that much of working capital to run the business. And $150 million of FCCBs are due in 2012. This is the total debt profile of the company. So post this transaction, we'll be left with no long-term debt. FCCBs will be there for $150 million, which are due in 2012, and about 250 to 300 crores of working capital will be left in the books. And still, we will have enough cash actually in the company to look at the new and niche growth opportunities as we go forward. And let us look at it like this. 4 years back, Orchid did not have a single injectable formulation. Exactly 4 years and 2 months back, we launched our ceftriaxone vial in the American market. So in 4 years and 2 months, if we could create a value for part of our business for $400 million, with $400 million into the company, in the next 4 years, we can definitely create much more value with niche opportunities going forward.
Yeah, I just wanted to clarify one thing, Raghavendra. Does Hospira hold any stake in your company? Because we understand that Solrex has been selling and Hospira has been buying and could hold close to 5% stake in Orchid right now.
They don't hold any shares in the company. I don't know internationally whether they have any GDRs or other things, because domestic shares they don't hold, and what Solrex is selling is independent of what anybody else is holding. So I don't think they are selling and these people are buying. I don't think so. They are not linked.
What is the profitability and Raghavendra, what is the profitability and margin profile of the residual business after the injectables going out? Because one gets the sense that what you have sold is inherently with a much higher margin and profitability profile than the API business that you have at this current point, even with assured revenues from Hospira.
Yeah, there is a model that we have worked on with them in terms of how the pricing will be done for the bulk actives and the product mix and the quantities. So a combination of these is restoring most part of the EBITDA that we will be losing. At the current run rate, $90 million of top line and about $35 to $40 million of EBITDA is what is going to be affected by this transfer of these assets or this business to them. But I think at the net profit level, it will make much better sense because of the interest saving, as well as at the EBITDA level, we will claw back most of it by adding products to this pipeline for which they have to buy exclusively from us for the next 10 years, as well as increase the quantities because they have their proprietary dosage delivery items in which these antibiotics go, which is called the Advantage Vial and things like that. So the ramp up of the business in different markets, products and quantities will help us claw back most of the EBITDA that we will be losing at the moment. So at the current run rate, it's about 90 million top line and 35 to 40 million of EBITDA is what is part of this business that we have given to them.
And what will be the first cut in terms of EPS getting hived off, Raghavendra, first for FY10 and whether for FY11 as well?
FY10, there is no impact because this transaction is closing in the second half of March or first half or second half of March. So for FY10, there is no impact. And FY11, it will be EPS accretive because at the net profit level, I think my estimate is around 7 to 8 rupees EPS accretion should happen because even though we are losing out a little bit on EBITDA, we are saving on interest as well as we'll claw back on the EBITDA itself by doing more quantities and more products. So I think it will be about 7 to 8 rupees accretive for FY11.
Thanks, Raghavendra, for joining in today. That's the Orchid view. They say that yes, the exciting part of the business may be going, but they created that exciting part of the business in about 4 or 5 years' time. So having sold this and repaired their balance sheet, what's stopping them from creating a business with similar value over the next 4 or 5 years, and that with new products and research is what they would be seeking to do. So time will tell whether they're successful in doing that. For now, the stock is down 4% at 211. Take a break.